It took me more than 10 years investing to realize what I'll tell you now. And this is for all investors, but more especially for beginners investors, because what you have to realize that investing is not just numbers, but also a mind game. I'm Eddie from Triple Alpha Mind, and in this video, we are going to deep dive into the key concept and the key lessons that I got from my more than 10 years investing. So let's get started. When we talk about investing, so we are going to discuss about stock picking, and meaning taking your own investing into your own hands. Of course, so if you choose to go the passive investing route, meaning that you are just buying the S&P 500, so all of these lessons that might not apply to you. But if you try to select stocks by yourself, and if you try to invest to try to outperform the market, so by yourself, I think that there are core lessons that all great investors have learned along the way, and that I'm going to share with you today. So the first thing I think which is very important, is that investing is very hard. It is hard. Why? Because it's not just about understanding businesses, understanding valuation techniques, understanding the financials. I think that everybody can learn that, and these are hard skills. But you need to have soft skills, because this is a mind game. Everybody on the planet is playing this game. So the most intelligent people on the planet, they are in this game. So if you go into the game of investing and into the stock market, so you have to understand a lot of things beyond just the hard skills and the financials. Indeed, investing is not just a number game, but it's a mental game. It's a mental game because you are the one investing, and as a human, you have emotions, meaning that you will have to make decisions based on your own rationale and your own accountability. And when this happens, well, you will understand that even if you think that you are rational and you think that you are cool-headed, it is very hard to actually gather your emotion. It's very hard to control your own emotion as a human being. I think that there are a lot of emotions that you need to experience firsthand to understand what it means. Losing money, missing opportunities. These are emotions that if you've never felt them before, it's very difficult to describe and very difficult to understand how you will react to them when it's going to happen to you. That's why I think experience in investing is very important, especially for the soft skills that you need as an investor. Investing is a mental game because it's a mental game against yourself, but against other investors. Because most of the time, in order to make profit and in order to make money, you will have to go against the grain. You will have to be a contrarian, meaning that you will have to have a different opinion than someone else. And sometimes you may be wrong on the short term, but you may be right on the long term. So which means that there is a period where you will change your mind. There's a period where the fact that you are right or wrong is going to change. And so you have to be aware that you cannot be right all the time. And there will be time where you will be wrong, for sure. And the difficulty is to understand that you may be wrong for a very long time before you are right. And the difficulty in investing is to recognize when you are really wrong, meaning that you will never be right, and when you are just wrong, but just temporarily. And this is a very difficult thing to grasp as an investor, and I think that these are decisions and mental framework that you have to build for yourself if you want to select stocks by yourself. Because no one is going to answer these questions for you, definitely. Because this is the accountability part of investing, and this is what you learn as you get more experience. And this is what I've learned from my more than 10 years experience investing, and I think that this is what every portfolio manager is learning. Taking decisions by themselves, taking accountability, thinking independently, and knowing that you may not know if you're right or wrong at the end. Another very important thing that I've realized and that you will realize investing is that you will miss opportunities, and this might be very painful as an investor. So opportunities, they come and they go. So sometimes you want to buy a stock and you just don't do it, and the stock actually runs up very high, and you just miss an opportunity. I think that these type of things, they're going to happen much more than you think. And the way you react to that afterwards is very important for you as an investor. I think that from experience, you will realize that you have to accept that this is part of the game. and you should not chase stock. You should not FOMO just because you have missed an opportunity. You have to recognize the opportunities first, and as you get more and more experience, then you will be better at actually seizing these opportunities. But definitely you will miss them, because this is the way you learn the game, and this is the way great investors have actually understood the game and actually improve years by years by recognizing these opportunities and knowing when not to miss them. But still, I think every investor is going to miss opportunities regardless of their experience, regardless of the level. And I think that this is part of the game. You will miss opportunities because you don't know the future, and you also are not perfect as a human being. And this is also part of the randomness of the game. I think that people need to recognize that as well, that you might be right on the fact, but still, like, things are not going to develop as what they should have based on your thesis, even if you were right at the beginning. So there's a huge lack of also factor in investing, and this is something that you have to accept as an investor. Another very important lesson is that you will have humbling moments. You will have big losses as an investor. I think that every significantly experienced investor, any mature investor, have had this experience, and that's how you grow. The most important thing is that you have to have these big losses, which are not going to actually kill your portfolio indefinitely. That's what is important. So you have to lose big at the beginning, not at the end. And that's what the most important thing I think you need to realize. So that's why when you're young, you can take some risk. But when you're much older, so you have to be much more, I would say, patient and much more risk averse than when you're young, because you have less time to recover and you have more money to lose because you have more money altogether. So that's why, like, risk taking is also very important. But having said that, like, if you want to have big returns, you will have to take risk. You cannot just actually compound slowly with very risk-averse stocks, like dividend stocks. I think that this strategy is not going to grow your wealth significantly. I think you will have, I would say, an average return. So I think this is a good strategy, but that's not a great strategy if you want to select stocks. I think that if you're doing that, like, it's better for you to just buy the S&P 500 or buy an index fund, which is much lower in terms of maintenance. But if you want to select stocks, for me, in my opinion, does not make much sense to be that conservative, trying to only pick dividend stock that grows only 3 to 4%. But the thing is that if you want to have significantly outsized returns, you will need to take risk. And taking risks means potential losses. So you have to accept that as an investor. And especially for new investors, where you have to accept that you will make mistakes, you will lose money. If you don't accept that, I think that you cannot invest altogether. That's the part of the game. And I think that this will come with experience, the realization that you can lose money, and the realization of the pain that it actually brings to lose your own money comes with experience. And that's what also I realized that you will realize with experience, is that this is very painful, but this is very helpful as well going forward to really make the best decision for your portfolio. Speaking of losses, I think one key importance, and that's what Warren Buffett also highlighted when he said, like, rule number 1 is never lose. Rule number 2 is don't forget rule number 1. The thing is that you should never lose, in the meaning that, well, you need to survive first at all costs. I think that's the most important thing. You have to stay in the game with significant actually capital. That's why huge losses are actually very detrimental to your portfolio. I think a lot of people on social media and on YouTube, for example, say they are fine with like drawdown of like 40 or 50% in their portfolio, but the reality is that I think this is BS, because when you really experience that in real life, you will see that your mindset and all your psyche is actually going to change. You cannot really be the same person when your net worth is cut in half. I think that you need to experience that to really understand. And so that's why, like, if you want to stay in the game, you cannot have these big losses because it's so difficult to actually come back from them. And so that's why that as an investor, so you have to take some risk, but you have to take some control risk, because you cannot lose 40 or 50% of your portfolio in some stocks. That's what I realized, like, after 10 years investing, and this is what I'm just trying to convey to you. So don't take crazy risk. Don't take things that could really like blow up your whole portfolio, this is not worth it, definitely. Well, it's better to actually grow your wealth maybe a little bit slower or maybe a little bit more slowly, but by avoiding this type of big losses and blow up in your portfolio, you will be able first to actually remain sane, to take right decisions in terms of investing. Like for example, do not sell at the bottom of the market, meaning when the market itself has actually sold out by 30%, meaning that all the stocks have been sold out, like on Liberation Day, during COVID in 2008, I think that at this point, well, unfortunately, there is nothing to do. So if you actually got caught in the decline and all your stocks are down like minus 30%, the worst thing that you can do is actually sell your whole portfolio. That's, I think, a key lesson. There's nothing to actually debate on that. The thing is that in this case, well, you have lost one game, but you should not lose the whole party. So that's why you should remain invested at all time. And I think that, well, so if you have not been able to be defensive at the right time, well, that's unfortunate, but you should not leave the game altogether after you lose minus 30, 40 or 50%. Another realization that you will see, and I'm sure that you've seen already, is that order will win when you don't. And you have to accept that as an investor. You have to accept that not everything is going to be in sync with other investors. There are some investors who are going to make millions. There are some investors that are going to be able to retire based on a single stock, like Tesla, Palantir, HIMS, for example. But the thing is that they might get lucky, or they might have, I would say, some kind of talent that you might not have, or you might be at the right time or at the wrong moment. But the point is that, well, you should not compare yourself to others. So what you want as an investor is to be able to get rich predictably, meaning that you should not try to expect kind of a luck in one stock. And especially that trying to actually get this one strike stock like 10x, 20x is going to be very detrimental to your overall portfolio, because you might get one, but then you will try to get others. And this is where you're going to lose, because you can win for one, maybe for two, but there are not like 100 stocks that can 10x or 20x. So you will have a lot of mistakes going forward if you continue. So some people are actually kind of lucky if they can get this strike like on Palantir, Tesla. I mean lucky in the sense that they selected the right stock. So that's the point. And they might have like some kind of foresight in those stocks. They might have the ability to not sell when the stock went 2x, for example, and they kept until 10x and 20x. But that's not the point. And on your side, you have to recognize that you should not try to compare what you are doing with what other people are doing. Because what you want to do is try to grow your wealth predictably and try to compound over the years to play the long-term game. Because if you try to play a short-term game, this is a whole different game. And this is where you actually get against hedge funds, for example. And that you really don't want to do. And also, like, the shorter term you are in terms of investing, the most likely you're going to lose. That's why you want to play a long-term game, because you might actually win, but a little bit more slowly, but much more predictably, and with a higher rate of success than if you try to be short-term, because short-term can actually blow you up very quickly. But that's why all these options play, leverage play, they are very dangerous, and definitely I don't recommend them, because this is something that a lot of investors are kind of mishandling. I'm sure you are seeing a lot of on YouTube that people are using them and they are getting a lot of money. But especially if you're a beginner, I think these are very dangerous, because these are things that can blow up your portfolio altogether, and you can lose a lot of money, and it's very difficult to recover from this type of mistakes. So be reasonable. I think that's the most important thing. Investing is a long-term game, and that's why you need to stay in the game and you need to compound very predictably. You have to take some risk, yes, but you have to take some control risk. So very predictable wealth building. So if you're interested in other analysis and other investing wisdom like this one, so please check my other videos, please subscribe, and I see you in another one. Bye.